If you are looking for some financial inspiration, look no further than Jesse Stine. Jesse traded his way to a fortune in the space of only 28 months, turning $46,000 into $6.8 million. This is a multiple of 147 times the initial investment. Even $1,000 would have turned into $147,000 over this period. We look at how Jesse Stine managed this astounding return. In this animated video, we present Insider Buy SUPERSTOCKS by Jesse C. Stine. Jesse started out just like you and me, an independent stock trader. In this book, he shares his strategy, which is a blend of technical analysis and fundamental analysis, a style closely aligned to mine. In the early years, Jesse paper traded popular stocks like Coca-Cola, Delta Airlines and Nike. His paper returns were mediocre, and he soon found out that super performance is found in unfamiliar stocks, not the familiar stocks he was following. Let's take a look at his journey. Jesse's first investment came through a recommendation from a friend, a biotech company awaiting FDA approval. It was suggested the price would increase from 20 cents up to $15 once approval was given, a 7,500% return. Jesse opened up his first brokerage account, deposited $2,000, placed the trade and dreamt of riches. A few months passed by, and the stock slowly drifted lower until the news came out that the FDA had rejected the drug. Jesse's $2,000 went down the drain, along with his dream of riches. 2 years later, Jesse interned for a small technology company, and shortly after, through advice from his colleagues, his boss and a $3,000 loan from his father, he again invested. Again, many months passed and the stock drifted down until it also became worthless. Another punt, another loss, and another lesson. In 1998, Jesse returned to Atlanta, and during this period the stock market was making huge gains and was a talking point in many households. At this point, Jesse's attention turned to day trading. He put $10,000 into a brokerage account at Ameritrade and proceeded to trade well-known names like AOL, Amazon and eBay. Jesse was hooked and started to use leverage to enhance his growing account balance. That was until the financial crisis hit, which saw many tech stocks fall in value by 70% in a short space of time. Once again, Jesse lost everything, his savings and his day trading career. He left the markets for 3 years, vowed never to invest again, and continued his education, where he studied for a master's degree in business. In 2001, Jesse was hit with a setback regarding his health. Fortunately, his health improved many months later, and he turned this setback into a foundation for future success. He completed in-depth research relating to his initial diagnosis, which led him to a company called Elan Pharmaceuticals. After thorough fundamental analysis, he believed the value of the company could reach $500 million, which was 160 times more than the current valuation. He noted that the stock price just a few months earlier was considerably higher, and believed it could reach these heights again. To add to his analysis, he had seen that the CEO bought several $100,000 of stock at the current price. During Jesse's 4-year absence from the markets, he managed to save $22,000, and he put it all on the Elan trade at a price of $1.25 per share in the month of October 2002. Over the course of the next 10 weeks, the stock surged to $9, turning his investment into $165,000. During this period of increased confidence, Jesse added leverage to enhance further growth. Not long after, bad news struck the company, and in a space of a few days, his investment was back down to $36,000. To compound Jesse's misery, the share price grew to $30 over the following 12 months. So far, We have seen a high-risk pharmaceutical tip go wrong for a loss of $2,000, a tech company recommendation capitulate for a loss of $3,000, and with some research, a rollercoaster ride trade that eventually ended in a profit of $14,000. At this point, Jesse read every investment book under the sun, studied technical analysis, fundamental analysis, and combined them both to develop his own unique strategy. His goal was to be the best investor he could possibly be. More equipped than ever before, Jesse scoured charts with his finely tuned strategy, and he came across a company at the time called TRM Corporation. He noticed a specific chart pattern that he called the staircase, a pattern that would soon change his life. Jesse noticed a repeating pattern. The price consolidated at 25 cents for a few months, forming a base. The price then shot up to 75 cents and stabilized for a few weeks, before repeating all the way up to $4. Equally appealing was that almost every company executive was buying stock throughout the pattern, regardless of the ever-increasing price. This time equipped with thorough analysis, Jesse bought into the trade, and over the coming weeks the price increased to $5, and with it so did his confidence. Over the next 7 months, the price rocketed to $27, and with the help of some leverage, his starting account of $46,000 rose to $800,000. It was clear Jesse's persistence and dedication to education was paying off in a big way. Or perhaps not. During a trip to Las Vegas, the share price endured a huge sell-off, and within a day, amplified by leverage, his account dropped to $150,000. Despite this huge setback, Jesse was confident he found the strategy that would change his life. 2 years were spent religiously following this strategy, and Jesse's account grew to staggering proportions. In October 2004, his account grew to $267,000. In December 2004, it grew further to $586,000, and by May 2005, it had grown to $1.23 million, and so on until it reached $6.8 million by January 2006. We will look at the detail of these trades shortly, but first let's see what the 2008 market crash had in store. With $6.8 million sat in the bank, Jesse was justifiably feeling very confident, and when he saw the market decline from late 2007 through to late 2008 unfold, he saw an opportunity to increase his account further, and in his mind, the market had oversold and was due a rapid rebound. To fully capitalize on the opportunity, Jesse decided to utilize leverage in a big way, with a vision that his account would grow to unthinkable proportions. He proceeded to place a huge trade on the S&P 500 and was convinced the rebound was imminent. The market, however, had other ideas. What came next took many experts by surprise. Not only did the market not recover, but it dropped significantly and rapidly. Jesse Stine lost a little over $5 million of his $6.8 million account in a matter of days. His account value dropped to approximately $1.7 million. In Jesse's own words, he says, "I committed a series of fatal mistakes. Over-leverage, using options, catching falling knives, trading the general market and trading without stop losses." It was clear that Jesse ignored his original strategy which got him to the $6.8 million mark. It was a recipe for disaster. In this section of the video, we will look at some sample charts and trade that Jesse took using the strategy that got him to $6.8 million in 28 months. Starting with a company called Dynamic Materials Corporation. Ironically, the ticker symbol is BOOM, and the stock did just that. Let's take a look at some of the technical aspects Jesse looked at on the chart prior to making a trade. You can see here that a long base formed over many weeks, and at the point of breakout, there was high volume in comparison to previous weeks. The price increased above the 30-week moving average, and the cost per share was less than $15, a threshold set by Jesse for superstock selections. In terms of fundamentals, the P/E ratio was 10, earnings were increasing, debt was low, and insider buying was evident. Jesse entered the trade at a price of $4.45, and he saw this as a low-risk entry point because the price started to consolidate, whilst volume dried up. Jesse sold at this point for a near 500% gain in 8 weeks, and he saw that the stock price moved way too far away from the 30-week moving average. This was a classic superstock. Another company called Forward Industries passed Jesse's superstock criteria. Its cell phone sales were up almost 100% year on year, and net income also increased by close to 600% over the same period. Here we can see that the technical criteria were also met. There was a long consolidation period over many weeks prior to the breakout. Volume expanded considerably on the breakout week, price rose above the 30-week moving average, and again the price was below the desired $15 threshold. Insider buying was noted here, and there was a low number of shares outstanding. Jesse entered the trade here at a price of $3.81, which coincided with a drop-off in volume. Assuming a stop was placed here just below the previous week's closing price, the risk-reward would have been excellent. Jesse eventually sold here at the price of $30 for a 1,500% return in 9 months. This was another classic example of a superstock in action. There are many more examples of the trades Jesse took in his book, but you should at this point understand the basic concept of his strategy that made him a fortune. And if you do, I would really appreciate it if you would hit the like button below. It really does help the channel. Let's move on to some lessons and words of wisdom from Jesse's vast experience. In no particular order, don't listen to tips or invest in anything you know nothing about. Stay away from day trading. Jesse makes a great analogy when he says, day trading is like picking pennies up in front of a steamroller. It's not very enjoyable, and over 90% of day traders fail. Let your winners run. Many beginners are keen to take their profits early to experience the feeling of being right. But remember, the game is not about being right. It's about how much you make when you are right and how much you lose when you are wrong. Use only weekly and monthly charts for technical analysis. They are far more reliable than the lower time frames. Huge hedge funds use the longer time frame charts for a reason. Don't get drawn into the excitement of the lower time frames. Buy individual stocks as opposed to ETFs or mutual funds. Favourable risk-reward is usually only discovered in these individual stocks, aided through research and chart analysis. Don't over-diversify. Research a few selective stocks that can give you an edge. In summary, Jesse Stine has proven through his method that riches can be achieved. The book covers over 250 pages and details all the trades he took to achieve his super performance. It is one of the most enjoyable books I have read to date, and as such, I give it 5 stars. Thanks for listening. Again, please hit the like button, subscribe, and let me know below if you have any book ideas for review.